Hello and welcome. Today we have Marion Labor, macro strategist at Deutsche Bank, who covers payments, digital currencies and fintech for Deutsche. And we're going to be talking in our second chat about digital currencies, talking about getting ready for digital cash. Welcome.
Thank you very much, Jack, for the invitation. Very glad to be here.
El Salvador have just announced they're going to present a bill to Parliament to introduce cryptocurrencies in their country. Can you just remind us what we're talking about here? Because what's the topic really?
Yeah, sure. So we are going to talk about the different kind of digital cash that we have. So mainly cryptocurrencies and central bank digital currencies. But first, let me start with some definition of what we call money. So in terms of classification, I like the taxonomy of money, which is also called the money flower, which is done by the Bank of International Settlement. And the Bank of International Settlement defines money by 4 different dimensions. The first one is who is issuing the money. So is it a central bank versus a private institution? Who can access it? Is it a wide access versus a restricted access? What is the support? Is it a digital versus physical support? And how is it transmitted? Is it peer-to-peer, like token-based, or is it via an intermediary? So by definition, a cryptocurrency is digital, widely accessible, but not issued by a central bank, and it's token-based. While a retail CBDC, central bank digital currency, is digital, also widely accessible, but is issued by a central bank, and it can be peer-to-peer as well.
CBDCs are emerging and evolving worldwide, but are there new ones emerging? Are we seeing new ways of doing things?
Yeah, you're right. Actually, they are emerging worldwide. And just to give you some idea, over the past 3 years, central banks and governments around the world have multiplied and speed up the digital cash initiatives. A 2021 survey, which is published by the Bank of International Settlement, revealed that we have currently 86% of central banks which are developing a CBDC. And the work goes far beyond research. We have 14% of central banks which are already running pilot projects and 60% which are experimenting proof of concept. And looking ahead, the BIS expect that central banks representing about 1/5 of the world's population are likely to issue a general purpose CBDC in the next 3 years. And in terms of motivations, there are several. They are very numerous. With some of them, some central banks have mentioned financial stability, others monetary policy implementation, financial inclusion, like for example in China and in some emerging economies. We have also payment efficiency, both domestic and cross-border, and payment security. In terms of who is leading the wars on that topic, I would say the Bahamas and Eastern Caribbean, given that both have already launched their own digital currencies. And then we probably have Sweden and China. Both countries have started piloting their digital currency early last year. And we expect China to launch it live for the Winter Olympic Games next year.
But the corporate treasurers are en masse are trying to minimize the amount of cash they have to cater for. And then all of a sudden, these new CBDC currencies are emerging. Are they all going to be the same? Will the corporates be able to adopt one approach globally, or will they have to do it country by country?
Yeah, that's a good question. So again, apart from the Bahamas and Eastern Caribbean, no central bank has launched their CBDC live yet. And most central banks have published research papers, but very few have taken final decision yet. So most of them, we know that they are envisioning to have offline function and to have a 2-tier system and to be intermediated by the commercial bank. Regarding technology and the anonymity question, many questions are still unanswered.
Okay, so if we look at CBDCs versus cryptocurrencies, which is our next slide, Can you explain the differences? Because corporate treasurers are going to have to cope with both, aren't they?
They have the same aim, basically, to digitalize cash, but they are very different. Central bank digital currencies issued by definition by a central bank, so a public authority, while cryptocurrency are issued by private institutions. They are also fundamentally different in terms of centralization. A CBDC is fully centralized. It's operated via the central bank, while a cryptocurrency is completely decentralized. A CBDC.
The cryptocurrencies, there's 5,000 of them, isn't there?
You're absolutely right. Yes, there are, over 5,000. And just to be clear, when we talked about cryptocurrencies, we can talk about very different cryptocurrencies. Clearly, there are some real jokes like Dogecoin and also some scams. But I envision Bitcoin as a store of value rather than a mean of payment. And I see the next phase of Bitcoin's evolution is even more migration into the regulated world. So definitely not all of them will survive, but I expect Ethereum and Bitcoin to continue to coexist, as they're very different types of assets. And there is also a very interesting case study with DeFi for Ethereum.
One big issue with the central bank currencies is they're removing the anonymity, certainly in some of the systems, of the transaction. So the ledger is kept secret to consumers, but not to authorities, as you put it in this slide. How are we going to manage this?
You're right. This is a very interesting question that you're raising, because it's definitely a crucial point. And for me, that's the main difference between emerging economies and advanced economies. In advanced economies, many citizens really care about their anonymity, while for emerging economies, and I'm also here especially referring to China, by definition, an honest citizen has nothing to hide. So this is a crucial issue for advanced economies, much more than emerging economies.
What sort of usage patterns are we seeing emerging? I think you've got this on the next slide. Starting first with consumers.
So what we are seeing in terms of adoption rates of cryptocurrency, we are seeing first strong differences between countries. So when we look at emerging economies, and this is true for China, but it's true also for other emerging economies, they are much more familiar with cryptocurrencies and especially Bitcoins. While in advanced economies, we are probably more risk averse, and we have also an older population, and people are more reluctant to invest because it's very financial. It's a very financial and volatile investments. What we found in our survey, overall, older people we surveyed had fears about cryptocurrencies and found them harder to understand. They believe that they are very volatile financial bubbles, like the dot-com bust, and saw them as a low liquid financial instrument. And a third of those surveyed had no idea how cryptocurrencies work, and 40% had only a partial understanding. And by contrast, around a third of millennials believe that cryptocurrencies are replacing cash and credit debit cards, according to the survey that we conducted with over 4,700 people in the US, in the UK, in Germany, in France, in Italy, in Spain, and in South Korea.
This gives us a very different pattern, doesn't it, between the countries, but also between the age groups and the different types of system.
Yeah, absolutely. So we have, a kind of a clear gap between countries and between generations.
Now, I chaired a group of treasurers recently and asked them what was their attitude to cryptocurrencies, and it's very much like your findings in your survey, their attitude to cryptocurrencies. How are we going to overcome this?
Yeah, that's a very good question. So actually, we conducted a survey with over 200 CFOs and treasurers around Europe. And what we found is that there is nothing on the horizon in terms of adoption of cryptocurrencies. So CFOs and treasurers are unlikely to adopt cryptocurrencies in the near future. And in the next 18 months, only 5% are likely to use or to receive cryptocurrencies, and approximately 80% are unlikely to use them. And one of the main reasons that they cited for not adopting cryptocurrencies is the lack of regulation. However, central banks are making progress on that. And the European Commission, for example, published a proposal in September, and a public consultation is taking place. And we should have next term the directive for markets in crypto asset, MiCA, which is expected to take effect. And the second reason is obviously volatility.
So if you bring all this together, the cryptocurrencies development, the development of the central bank digital currencies, what would be your conclusions? How would you sum it all up?
Yeah, I will summarize it around three different parts and what we are seeing in terms of cash, crypto, and central bank digital currency. In terms of cash, what I want to reinforce here, it's still widely used in many advanced economies, and it's unlikely to disappear anytime soon. We have around 60% of the population who think that cash will always be around. So this was true before COVID, and it's true post-COVID. A third in developed countries consider cash to be their favorite method of payment. And again, it has not changed before and after the pandemic. But the pandemic has clearly hastened the decline of cash as a mean of payment by 4-5 years.
So if I'm a corporate treasurer, I still need to plan for cash, ordinary cash, to be around for a long time.
Yeah, absolutely. Cash is definitely declining, and it has been pretty quick over this year. I mean, the pandemic has clearly speeded up the trend, but it will stay there, and it's unlikely to disappear soon. What we are seeing in terms of CFOs and treasurers, it's like most of them they prefer to use alternative method of payment, and especially digital method of payment.
On the other hand, cryptos, what's your conclusion there?
Cryptos, Bitcoin is here to stay. We have a market cap which is around between 600 billion and 1 trillion, depending on the market price, and it's very big, and it's here to stay. Transactions and tradability are very limited, so we should expect a price to remain ultra volatile. There are over 5,000 cryptocurrencies, so definitely not all of them will manage to navigate, but we should expect Bitcoin and Ethereum to coexist. We also have many kinds of payment, and cryptocurrency is not a mean of payment currently, but it could become a mean of payment. However, we don't expect it to become a wider spread means of payment, but more to be like on the side mean of payment. And we are clearly moving towards omni-channel infrastructure.
On the other hand, the central bank DCs, they're coming much faster, aren't they?
Absolutely. Yeah. I would say that the world has definitely shifted from asking whether digital currencies will succeed to how and when they will become mainstream. So it's pretty sure that China is going to be live next year for the Winter Olympic Games. We'll know more about the digital euro very, very soon, but they are very likely to continue researching and probably to start piloting a project. And overall, worldwide, central banks are speeding up their existing research and launching pilots.
Okay, so if you bring all this together, what would be your recommendations what do the corporate treasurers need to think through?
There are a few things that I will mention in terms of first opportunities and second in terms of top challenges. Opportunities, you need as a treasurer, as a CFO to really think how to cater for diverse market needs by offering a limited number of purchase options.
And that is a limited number, so you're not going to offer everything, just one or two.
Absolutely, but you need to be ready to have this diverse market and to prioritize. Second thing that you need to think through is how to use customized loyalty apps to cost in your business.
What does that mean? What do they customized loyalty apps mean?
It means that we are more and more moving towards digital apps and loyalty apps. So you may think about customizing, adding the right mean of payment, adding the right checkout, and to have a customized, individualized loyalty apps. And the third thing in terms of opportunity that you probably need to think through is how to use CBDCs to take advantage of low-cost alternative to cash and credit cards.
So you are assuming and thinking that the CBDCs will be a low-cost alternative.
CBDC, again, many things still need to define, but it has the aim to become widely accessible with unrestricted access and to be a low-cost alternatives. Yes. So compared to cash, when you receive cash payment, you need to bring it to the bank. You need to have it in a secure deposits and so on. For a CBDC, it should be much straightforward and much easier and faster and safer, hopefully.
Okay, so when you look at the top challenges, which of these is the most important?
In terms of the top challenges, so what you need to think is probably about operational and security risk. This is one of the key top challenges. We are moving towards a digital world, digital payments as well, and this is something that needs to be emphasized. In terms of cryptocurrencies only, it's very volatile. So if you think about accepting Bitcoin, you probably want to convert them directly into US dollars or sterling, depending on where you are.
Okay, so if we bring all this together, and I ask you now, what is the single most important thing about cryptos and CBDCs that corporate treasurers need to keep in mind when you're thinking through what to do?
Okay, so in one point, I would say that you need to continue to monitor developments of digital currencies, and both on the crypto side and on CBDC. Both are definitely coming, and sooner rather than later.
And that's the key point. Both are coming sooner rather than later.